Hello, everyone. It appears the post-election hangover is here. I have made mention after this day. I initially got some new long positions, but after this day, my scans, everything was extended. New long positions, we got one, I think, total on the quality and speculative side. Each session, basically, they did nothing. Then we started to finally pull yesterday, and today, big yank. Now we're still around the 21 EMA for the SPY. Is there anything wrong with this chart? Absolutely not. We're just short-term extended. It's kind of really hard to see here on a log scale. Arithmetic scale really doesn't even do it justice, but I do like these charts. But on a daily time frame, we're above the 50, the 200, and the 500 EMA. And then if we look on a weekly, look at how far away we are from the 50 weekly moving average. See, that's the problem. We're just too extended short term. A pullback, was expected. And look at how far away we are from the 200 SMA, and the 500 EMA is way down there. And I'll show you guys, we do hit the 500 EMA, and I mean, that just shows you how far we are from it. Now remember, I welcome a pullback. I'm a buyer. You dip below the 200 SMA, any reclaim of the 200 SMA is a buy for me in SPY. Same with the 500 EMA for the next 10 plus years. 50 SMA, I still like to use my tickets indicator, but that really has not worked in 2024. But long-term portfolios are still doing very well. However, after today's session, a lot of names got hit hard. I'm very semiconductor heavy in that long-term portfolio. So today was not a good day, but overall everything is good. And the quarterly portfolios this quarter, 3xing the S&P 500 before today. Now I assume after today's session it's probably like 2.5x the return of the S&P 500. Whenever I last checked it with the guy that's tracking it on a spreadsheet, Excel spreadsheet, we were up 21% versus the S&P 500 7%. We're going to reconstitute that portfolio on Tuesday. We're going to take out the names that are in there, the 10 stocks, 10% of capital in each, hold for 90 days. We actually didn't reconstitute it this most recent quarter. We kept it the same as the previous quarter. And in the 2 quarters combined, I believe the S&P 500 is up 10%. That portfolio was up 20%. So we doubled the S&P 500's return, but we're reconstituting it on Tuesday no matter what. I don't care if the market crashes on Monday, we're doing it. But either way, long term, quarterly, I'm still bullish, and I'm bullish for the next 10 years. Swing and position side, there are concerns. And one of the biggest concerns I have is just how extended everything is. Like pay for this earnings winter. I mean, it's nowhere near the 500, 200, or 50. And even worse, look at how far extended it is from the 21 EMA or the 8 EMA. Heck, even the 5 EMA. So things just are so extended that even when they're flagging out like DFS, which is a leader, it's still so far extended, I can't do anything with it. And for a stock that like I'm currently long, like GGAL, you can see where I went long. Let's get back to this chart. You can see it's just short term, good signal today, excellent relative strength line. But where is it in relation to its 21 EMA? Still extended. And that's the biggest issue short term for me. The 50 SMA, I used to not buy anything that was extended from the 50 SMA. The 21 EMA has turned into the 50 SMA. And in this tape, the 21 EMA is the 8 EMA is now the 21 EMA for me, it seems like. So it just seems like everything just, once it starts to move, it just stays extended. You'll see that I still have a white triangle here for app. However, ask me how big my position is following the initial long signal. I'll tell you, it's not that big because I kept taking profits on the way up, thinking I'm going to get a great re-entry signal. And I only got I actually haven't even, I thought it touched the 21 EMA here. It hasn't even touched the 21 EMA. So I can't get an ad signal. And that's this market right now. So short term, I am not surprised at all that we're selling off. I've been warning about it. I've been sizing down in new long positions even after the election day. And I was hopeful. I mean, I'm very long Bitcoin. Bitcoin, Bitcoin, Bitcoin. I'm a Bitcoin hold for dear life for the rest of your life. Hold it forever. Buy every dip, hold it forever. From 2022 to 2024, I've been making bi-monthly purchases of Bitcoin in my Gemini account. I also have bought ARCB and IBIT and other long-term accounts along the way. I am very bullish on Bitcoin moving forward and still am. But short term, things are just too extended. So this pullback after that election excitement makes sense to me. Now, there are some ugly price action that's starting to develop. I drew this trend line recently. XBI broke out of it, and now look at it. We've not only come back into the base, we're now breaking below the lows. However, am I shocked that it's failing? Absolutely not. Why? Look at this long consolidation and breakout. Why am I not shocked that it's failing? Because I keep telling you guys, when things are consolidating for this long, this relative strength line, what it was doing back here, is what you want to see it also doing during this time period. But instead, the relative strength line, this high is here, this high, lower high, this high, and even lower high. That's negative divergence to the overall market. Breakout, fake out, not surprised. But the XLV looks even weaker. The QQEW, the equal weighted NASDAQ, I got some red balance of power bars showing up. So it's just not that great. And IWM, if you fell for the last breakout, look at what the relative strength line was doing before that breakout. Then you break out and look at where the relative strength line is compared to where the breakout is, negative divergence. Was I shocked that it failed? Absolutely not. And then here I was hopeful. After the election, already in a QE cycle, very hopeful here. Love that spike in the relative strength line. It's very hopeful this could turn into something. But bottom line, is this relative strength high higher than this high here? Negative. Once again, it's negative divergence. So with the IWM now coming back into this consolidation, erasing the gains, am I shocked? No. Is it dead yet? No. We're still pulling back and trending above a rising 50, 200, and 500 EMA. This pullback is welcome to me. I think it's necessary, and I hope it continues. I am still very bullish long-term into 2035 due to demographics and artificial intelligence being the Internet 2.0 on steroids. But short-term, everybody got euphoric after the election. Everybody thought stocks could only go up after the election. It wasn't euphoric in my intermediate and long-term indicators or in the volatility and euphoria metrics I use, the NAIIM, the VIX, the put call ratio. None of that was extreme. But on the short term, I like to track the NASDAQ percent of stocks above the 5-day SMA. And we got super extended and over that 90 level right when we hit these highs. So short term, this pullback's welcome. Am I bearish short term? Kind of, but I'm thinking we're just going to have more chop. But bottom line is, I'm looking to buy Tesla. I'm looking to buy Coher. I'm looking to buy Reddit. I'm looking to buy A-Lab. I'm looking to buy anything that's leading right now, including even Pay and DFS, if I can just get some good consolidations. So that's what I am hoping for. Now, I want to end the video lesson by looking at the market with my tickets indicator and my time segment volume. It kind of is just a green light is go, red light means no go or slow, depending on your moving averages. And I've already shown you that we're trending above all of them. So the long-term time frame is up. But before I show that, I did get one new long signal, and I just had it as a recent long signal back here, but I got chopped out of it because I keep tight stops. And so I entered here, and once it went green, I'm not letting this thing go red. And so when we have this pullback here, my final stop is now below this low. and then bam, it failed basically. But it did an undercut and rally of the October low, was an earnings winner, and it's been consolidating sideways, and its relative strength line is showing strength versus the S&P 500. What I have here is engulfing candle over candle on heavier above average volume, pocket pivot point signal with an increase in BOP and relative strength. So it's showing strength to the market today. It's a good session, but I can't get crazy. And how I operate is using the anti-martingale methodology. As my trades do well or the market looks better, I double my size each day in new long positions. As the market looks weak or my longs don't perform, I decrease size. And after today's session in the overall market, no matter what, I have to decrease size. Now, you give me max green BOP the entire past 4 or 5 months, you give me taller green volume bars. Here was a grade A long signal for us, NEOV. You give me NEOV's chart today with PMW, yeah, maybe I'd take huge size. Look at this, 54% gain in the short term. And you can see that we entered it before the grade A signal. But this one I can't. And also, is it extended short term? There's a 21 EMA. There's a 50 SMA. Once again, short term is extended. At least it's at the 8 and the 5, so it's not extended from those. So I'm going to get long above the high of the day. First cut loss. I'm going to be a little bit tighter with my stops. I mean, this thing needs to work immediately for me. Or if I put $100,000 into this stock and if it doesn't work right away, I want to leave with $99,999. That's just how I operate currently. But first stop loss could be the 8 EMA, a third here, and your final third right here at the 50 SMA. I plan on calculating my risk, whatever I plan on losing on the trade from this low. The 50 SMA will be my final stop. If it can consolidate and pull back normally. Pulls back abnormally, I want to get the hell out. Goes red to green, is green for a few days, reverses and then goes red. I just want to get the hell out. So to end this video lesson, let's take a look at my tickets and TSV indicator on SPY. All right, so I'll go ahead and start out with the weekly time frame. I'm double red. Okay, guys. When you want to be really bullish, your weekly time frame, when you're double green, you look for daily to go double green. Daily goes double green, great. Hourly goes double green, and you're double green on the daily and weekly, great things can happen. And that happened a lot during this leg. So this is an example of a leg higher. So that's the weekly. We're double red. Now let's look at the daily time frame. Daily time frame, we're double red. We're stair-stepping lower, and we're red on the time segment volume. Great things happen whenever you're double green, and even when you're single green on one of the others, everything's good. But when you're double red, it's kind of a slow down time. And to show everybody that, here's a 1 hour chart. This is the most granular. You can see here that off this low, double green on the hourly, and you'll notice great things happened. Even here, you went double red, but you didn't really break below the 9 EMA on this intraday 1 hour chart. You stay double green. And here, you're red on time segment volume, but you're still green on my tickets indicator. Now you go double red. Since going double red here, we haven't ever gone green on either indicator, and we've sold off hard. The 50 SMA is usually what I use to trigger. So once you go below the 50 SMA, this methodology says this indicator should not be above this indicator should not be above the zero line when price is below this line and you're red. So we've sold off, but we're not weak yet. If this would have happened and we would have been below the zero line, it's a short for me. Right now, it's just a pullback. If we go green on one indicator, I'm looking for the other indicator to go green on the hourly, and that means it's time to focus on the long side again on the short term. Then when it switches daily, you're good to go, and weekly time frame, all is well on the shorter time frames. I know it's a bit confusing, but I really don't have a whole lot of time because I don't want to waste too much people's time. But trust me, you can back test this indicator combo on the hourly, daily, weekly time frame, and you'll see it works like gold. All right, everyone. I will see you in the chat room on Monday. Stay safe. I'm bullish long term, short term, I'm cautious.